At the data level, the delayed effect attributed to Xiangqian Capital has already begun to materialize. According to the latest data from the National Bureau of Statistics, in Q3 this year, final consumption expenditures contribution to economic growth continued to rise, reaching 94.8%. GDP growth was driven by 4.6 percentage points, with gross capital formation contributing 22.3% to economic growth. It added 1.1 percentage points to GDP growth. Detailed data shows high consumption growth is mainly due to increased resident consumption propensity. In Q3, average marginal propensity to consume was 69.8%, surpassing 2015 to 2022 levels. CSEC Research Institute states this reflects rapid quarterly growth in resident consumption expenditure. The rebound in the propensity to consume reflects an improvement in consumer confidence, which has boosted and sustained the recovery in consumption. When filming Super Investor this April, Mr. Song expressed his feelings about this, saying that after 28 years in the industry and 17 years specializing in consumer goods investment, he had finally witnessed consumption driving China's economic growth. Consumption now accounts for over 50% of the contribution to final GDP growth. Half a year later, when Mr. Song and I discussed this set of data again, he appeared even more confident, citing the development pattern of middle-income countries transitioning to high-income countries as the reason. Without exception, they need to shift focus from production-oriented to consumption-oriented society. According to 2022 data, with China's per capita GDP at about $12,800, our country is close to the World Bank's threshold for high-income countries. He consents that everyone has already started to realize this issue. Consumption has truly become the stabilizer and ballast of China's economy, as well as a driving force for China's economic development. However, Lao Song has drawn a line for Xiangqian Capital. Investors should not become the main protagonists. Lao Song is fond of entrepreneur. I talked with him for an hour, and in the transcript, entrepreneur appeared 20 times. Much of our conversation described the difference between entrepreneurs and founders, the latter a career choice, the former more like a collection of abilities. Someone who understands Drucker's management science and can master R&D and the market. They have a deep understanding of the product and the market. Lao Song sees this set of abilities as the true alpha in an era lacking major upheavals. As for Xiangqian Capital, as an investment institution, their goal is to become the company's business partner to the greatest extent possible, acting as an unofficial CEO for the enterprise. Becoming the sparring partner the company run toward becoming a champion and participating in its operations, makes them the alpha. Once this mindset was put into practice, it became the most important work at Xiangqian Capital, taking up 80% of the investment team's energy. Each invested project is assigned a dedicated team, which provides structured support around ROE, brand building, channels, market, and digitalization. Many of the knowledge maps, mind maps, and industry diagrams were simply drawn by Lao Song himself. There was nowhere in all of China to copy from. You could even say that too much meticulous work was done, and some of it was simply useless. Lao Song has publicly stated several times that this is a kind of counter-human nature competitive advantage, because it is neither a vision nor motivational talk. Instead, it is the result of the team's daily presence in each company, accumulating experience through concrete management and specific operations. Some costs were too high. Xiangqian Capital distilled two further points of consensus. First, philosophically, the essence of investment is buying a company's future profit growth. What you're truly buying is the dividend generated by time. They send analyst teams to analyze past financial data. That can only prove they performed well in the past. The other point, on a technical level, is the emphasis that the essence of investment lies in evaluating a company's discounted cash flow valuation model, and that the real value an investor can create is here. It is precisely in helping companies achieve higher and more stable profitability in the future. Speaking of this topic, Lao Song gets frustrated again. I see that many institutions nowadays are scattered and disorganized when it comes to contract. Investment contracts are often massive, sometimes 100 or 200 pages, including investment agreements, value-added agreements, shareholder agreements, and additional agreements. It seems as if having enough agreements can buy you a great company, but doing this only lets you earn arbitrage profits. If I were Lao Song, I'd be upset too, because I've seen a pre-investment research review through one of Lao Song's colleagues. In Feishu's collaborative documents, this pre-research is categorized under an item called preparation before entry. The pre-research itself is divided into legal, business, financial, and industry research. Each submenu under these categories contains dozens or even hundreds of report documents, updated on a weekly basis. Out of professional concern, I wanted to determine the completion rate of these tasks, so I had the following conversation with that colleague. Have you ever communicated with peers in the industry? Do your peers do the same kind of work as you? From what I understand, the level of detail in our work even surpasses that of M&A funds. In business analysis, member operations, sub-brand development, second growth curves, HR recruitment process management, the investment team is involved in all these areas. But do these reviews make it into their decision-making? Yes, we participate in major business decisions of companies. Moreover, this work itself reflects our philosophy. Only when we create value do we have the right to share in the other party's gains. I often see traces of Professor Wen Taijun in Lao Song. For example, Professor Wen Taijun has mentioned many times in public speeches and forums. Before the full embrace of the market economy, monetization in China's economy was very low. In 1978, when total industrial and agricultural output was about 1 trillion yuan, social deposits totaled just 22.6 billion. After transitioning to a market economy, many unmonetized resource-based assets entered the market, forming asset prices. Financial capital has gained more dominance, which is a form of virtual expansion that warrants caution. Lao Song also often candidly believes that finance inherently carries a certain sense of original sin. The current situation, where over half these profits are taken by over 30 financial companies and banks, deviates from the fundamental service-oriented nature of the financial industry. He hopes financial institutions and investors won't just pay lip service to upgrading strategies, but will actually get involved in running businesses. This is also why Lao Song decided to have this conversation with me. Before we started our discussion, I had a brief exchange with Lao Song. I wanted to settle on a topic so I could prepare targeted material. But Lao Song rejected this suggestion. He wanted the conversation to proceed without any predetermined topics. He hopes that after watching, everyone will reflect on what they've seen, rather than just discussing surface phenomena. Since the industry is anxious, with no time to think, accumulate experience, or conduct research, Lao Song is willing to offer a reference answer in the face of this economic transformation. But Lao Song still brought an unexpected twist. At the end of our conversation, he revealed an idea to me. He has considered that one day, Jiahua Capital might be renamed Jiahua Industrial. We don't see ourselves as just a fund company. A large portion of our investments are self-operated. You could say that for almost every project, we are the largest LP, accounting for about 30% of the total investment in each project. Lao Song believes the new name would more accurately reflect the actual work they do, while I instinctively thought of a round of financing Jiahua Capital conducted back in 2021. They brought in GLP and Sequoia China as shareholders rather than LPs. At the time, Lao Song described this move in an interview as a historical turning point, declaring that through resource integration, Jiahua had gained the ability to upgrade, iterate, and form a collaborative partnership team. Is there a specific timeline for this? I asked this as my final question, whether there was an expected milestone at a certain time. He replied there wasn't. This is something we have to accomplish on our own. It will require a long period. Lao Song answered without hesitation. He reverted to being that investor with the typical temperament of a macroeconomist, saying that industry can do more to help improve people's lives, but the return on investment in industry has declined rapidly. Ours dropped from 12.5% in 2008 to 5% in 2022. We had accumulated enough experience and capability. The most convincing proof to the market is for you to personally step in and conduct an experiment. In terms of costs, Lao Song appreciates achievements, that come with hardship and deep involvement. Perhaps the process is far more important than the result.